The strategy that I'm about to show you right now is so simple that any beginner trader can use that strategy. And this is the strategy that I used to send all these signals on WhatsApp, and I'm still using this strategy. So if you are seeing these signals on WhatsApp, just know that this is the strategy that we are currently using. And also, if you haven't been receiving these signals, all you have to do is click the link down below and you are going to get access to these signals. So the strategy uses 2 time frames, right? So all you want to do is you want to use 2 time frames. The first one is going to be a higher time frame. The second one is going to be a lower time frame, right? So whichever time frame that you are going to choose, but for me, I'm going to use the 4-hour time frame, right? So let me start off by explaining this very good trade that we got yesterday right here, right? So the way that this trade came about is that I was on the 4-hour time frame, right? So if we go to the 4-hour time frame, I want you to focus on this candle right here. So what we do with this strategy is we only use one candle, right? So we want to use one candle. So what we want to do is we go to the 4-hour time frame, and then you look for the current candle, right, or the previous candle, and then you mark the highest point of the candle and the lowest point of the candle, right? Some call this strategy CRT sweep, some call it liquidity sweep, some call it stop hands, and there's a lot of names for it. But all you are trying to do is that you want to simply catch when the market hits the top or the bottom of the previous time zone, and then it reverses back. So let me explain that with very simple terms, right? So what the market does most of the time is that if it is moving like this, you are going to see this most of the time on smaller time frames. If it is moving like this, and then it makes a reversal, it makes a small reversal right here, right? So what it does most of the time, before it continues to go down, it comes back up and then just sweeps this top here, and then it moves all the way to the downside, which is where some people are going to use things like double top, double bottom, things like that. But this is exactly what the market almost does, almost always, right? So it goes all the way up and then it reverses, but before it goes all the way down, it wants to collect the momentum. So basically what the market is doing here is just it's collecting momentum to go to the downside, and it's taking the stop losses of the people that have been placing their trade on this first part right here. So let me show you what I mean by this. So what you do here is you go to the 4-hour time frame, you mark the top and the bottom of that previous candle, right? And on the next candle, which is this one now, right? So what you want to do, let me delete this so that you won't be confused. So on this candle right here, what you want is the market to sweep above, right? So you can see the market opened right here, right? So on this case, the market opened here, right? It opened here, it went all the way up, and then it started dropping to the downside, right? So once you mark this upper zone here and this lower zone here, what you want to do now is go to the lower time frame. So for me, I would go to the 30 minutes time frame. You go to the 30-minute time frame or the 15-minute time frame, right? So when this happens, right, so forget about the next one. I will explain that also. You want to go to the lower time frame, to the 30-minute time frame right there, right? Once you go to the 30-minute time frame, you want to see, so our first touch was here, right? So I'll just use this. Our first touch is here, right? And the other one is right here, right? So what the market did here, it went all the way up and it sweeps right here, and then it goes to the downside. So this is the next candle that we are on, right? So we're here. So when the market goes above this zone that we marked with this top here, and then it comes back down, most of the time, 90% of the time, it's gonna create some candlestick pattern that you understand. But I didn't use candlestick pattern here because I know that the market have already swept here, and then it's now moving to the downside. So this was the end. So once you enter on the smaller time frame, and then you put your stop loss above the highest point it went to before it moved to the downside, and then you take profit to the lowest point of the previous candle, right? So if the market is reversing, it will have to hit the lowest point of that previous candle. So if it does that, you are going to make profit, right? So after this trade right here, after we got this trade right here, I got another trade very soon after, and I'm going to show you how I got this one. So this one I used the 30 minutes time frame, and the smaller time frame, right? So on the 30-minute time frame, I used this candle right here. So let me delete these blue lines. So we are done with this. Let me delete these blue lines and let me show you another one. So here, what happened here is that on the 30 minutes time frame, I marked the top of this candle and the bottom of this candle, right? So this was on the 30 minutes time frame, right? On the 30-minute time frame, I marked the top of this candle and the bottom of this candle, and then I saw this candle right here, this next candle here, right? So if you look at this, you're going to see this next candle right here. It went all the way up and it broke above and it went down. But I didn't see it here because once I marked on top here and the bottom, I went to the lower time frame. So I went lower to the 5 minutes time frame. And then what I saw here is that this was the first so our candle was here, the lower bottom is here, the upper is here, right? So I'm using this point right here, right, and this point right here. This is our target, the upper and the lower, and then the market is swept right here. You can see here the market is swept above and it went down. But the reason why we placed the trade all the way down here is that we missed this trade earlier on. And if we go to the 15 minutes time frame, you can see that the candle was big, so I didn't get enough time to place this trade on this candle right here. It went so fast, this one, and then the market, so we ended right here, and then the stop loss was above here, and then the take profit was below down here, right? So it might seem a little bit confusing to understand when the charts are already done like this, but I'm going to show you one more example. So this was another one. This was a very good trade right here. You can see right here. So what happens here is that this is a 15-minute time frame, but if I go to the higher time frame, you can see that on this candle, what I did is I just marked the top of this candle and the bottom of this candle, right? So I marked this top candle, this bottom candle right here, right? And I watched this next candle coming, right? So when this next candle was created, right? So it opened right here. You can see this next candle opened right here and it went down, right? It went all the way down here, right? And then it started reversing. So when it went all the way down, it broke here, below here, and it started reversing to go to the upside right here. You can see that. Then we ended right here. We ended on the lower time frame, and I'm going to show you how we ended that, right? So what happened is, if you go back to the lower time frame, like the 30 minutes time frame or the 15 minutes time frame. So in this case, if you go to the 15 minutes time frame, I think I used the 15 minutes time frame here. If you go to the 15 minutes time frame, you are going to see that. So you are going to see that the first candle started here. So this is the first candle. It started right here, right? And it went all the way up. It went also all the way down and went back up right here. This was the close of this candle. So we marked the top and the bottom. But on the higher time frame, you're just marking one candle. On the smaller time frame, if you do this enough, you are going to understand where the move is starting and where it is ending. So this was the first candle, started here. And then the next candle opened right here. And it went down and break below this previous candle here, low, that we marked. It went all the way down here. And when it was going up here, again, it created a bullish engulfing. But I said you shouldn't really worry about candlestick patterns, but they're always going to be candlestick patterns most of the time on scenarios like this. So we ended this, and then the market went all the way up, right, giving us another good winning trade. Okay, so now let me explain how we got again this trade right here. So on this trade, if you go to the higher time frame, the higher time frame was the 4 hour. Okay, so was the 4 hour. On this 4 hour, we marked the top and the bottom, right, with these two blue lines right here. So this was the top and this was the bottom of this candle, right? And then the next candle came here, and then it went all the way up. Now, the mistake that we did with this trade, right? And I posted this trade, right? So the mistake here is that we didn't wait for this candle close. Instead, I tried to enter with a sell stop. So the sell stop, I put the sell stop below this zone here. So when I saw the market going all the way up, I tried to put a sell stop below so that when the market comes, it automatically gets into this trade, which was a bad idea. And then the market goes all the way up to stop me out here and then goes all the way down. So if I go back to the lower time frame, you can see exactly what I'm talking about. So we ended the trade too early right here, and then the market went all the way up and stopped us out. Now I'm going to show you, if we had done this correctly, what we should have done and how we should have made this work. So let us go back to the 4 hour, right? Instead of using this candle, we should have marked. So what I'm saying is, if we, instead of using this candle here and placing the trade too early, we should have marked this one first, this one instead. So here, upper and lower. And let's make this thicker so that you guys can really see it. Okay, so if we had marked this and look at what the next candle did, it went all the way up and it closed right here. This is where we should have placed our trade. So you either place in this 4 hour, but I would say go to the lower time frame. But in this case, so that I just show you what I mean, we should have done this. Let this candle close and this candle open. We enter. Why? Because this candle here is the one that we are sure that it swept this liquidity right here, or it breaks above this zone. So whatever you want to call it, because there's a lot of debate between this liquidity thing, the ICT and technical traders. So this was how the trade should have looked like. And to confirm this on the 15 minutes time frame, here's how it should have looked like. And you can see how clean it was going to be. It was going to be a very clean trade, right? You can see here, if we had a little bit of patience, and then so we ended here instead of entering here. So you can see how the strategy works. So I'm still refining this strategy, I'm still using it, and I'm still testing it in a lot of ways. I'm also trying to build like an EA that helps me test this for a long period of time. And if you want to get more updates on that, make sure you subscribe to the channel. Make sure you leave a comment or a like, just to show that you were here and the channel is now back on track. Thank you for watching. And if you want to learn more about how to start trading as a complete beginner, I will leave a link in the description below. And also, if you are trying to stay on YouTube, make sure you watch this video appearing on the screen right now.